Good morning and welcome back to Almus Market Mornings. Markets are stepping into a new week, which is filled with optimism as there has been a little bit of progress in the US-China talks. Looking ahead, focus will also be on the Thursday's $22 billion 30-year US bond auction. Normally routine, this one is drawing outsized attention amid signs of growing investor discomfort with long-term US debt. Good morning, JK. Friday was eventful with the jobs data from the US and the jumbo rate cut by the RBI. What should our listeners be looking forward to this week?
Good morning, Saraj. Yes, this week also promises to see a heavy dose of data releases, particularly on this one inflation from various regions, U.S. Inflation and then Eurozone final indication on the inflation. Preliminary was already announced, and then of course emerging economies, including India. So the inflation is very important because, particularly from the US, both CPI and PPI, investors will be scrutinizing the data to see whether there are indications of early pass-through of prices as an effect from tariffs. So as we all know, US already has imposed minimum 10% baseline tariff on all countries. Only the reciprocal tariffs have been postponed till July 9th and subject to negotiations that is ongoing. So this is a very important week from that perspective. And in this context, the bond issuance, which you mentioned about 30-year, is very important. In fact, post US data on Friday, we have seen the rally in yields in 10-year as well as in the 2-year. Particularly 10-year is now trading above 4.5%, and 30-year is close once again closing in on 5%. So whatever buying in the bonds that we see post any data is fizzling out very soon, and people come back and take profit and maintain a neutral position. And there are people who also look to sell bonds on any uptick in the prices. So definitely, I think the issuance will be very closely watched for how it pans out. As far as Friday was concerned, a very heavy slate was there. We had RBI meeting where unprecedented rate cut of 0.5%. Yeah, not unprecedented, but unexpected rate cut of 0.5%, because market were mostly priced in for 0.25% rate cut. But even more unexpected was a cut in CRR of 1%, and this releases almost 2.5 lakh crores of additional liquidity to the banking system over the next 2 months. And this is in addition to a lot of liquidity easing that has already been seen, and total liquidity eased into the system so far by RBI comes to 9.5 lakh crores. That is a massive amount. And then in his press conference, the governor also stated that they are going all out to support a growth which is not in the region of 6.5%, but in much higher region of 7.5 to 8%. So they are front loading the rate cuts, and that's a very bold step that they have done. Of course, there may be much limited scope for further rate cuts unless the inflation eases further. And that is something that we need to wait and see. But if you look at it, RBI has done their bit, both through monetary and the fiscal side, because just 10 days back, we had the news about RBI releasing a record dividend of 2.79 lakh crore rupees to RBI as a dividend for FY25. And this also adds to the fiscal balance of the government, which means that, both from monetary and fiscal point of view, RBI has done a good amount of work for the government. So there's a lot to look forward to as far as the investors are concerned. How the economy will perform. Definitely, we will be watching how the investors behave to take advantage of the lower interest rates and start investing in the economy for a further higher growth level. On the US side, we had the non-farm payrolls once again very keenly expected in view of a lot of negative lead indicators during the week. So, but if you look at non-farm payroll, it came slightly higher than expected. Unemployment rate was steady at 4.2%. Wage inflation was higher, which doesn't gel with the weak job market. However, there was a hefty revision of past 2 months data by about 95,000. That was a negative factor as far as that report was concerned. Market more or less ignored the data. From that point of view, they did not see it as a very soft data. And if you look at the stock market in the US as well as the bond yields, these were seen as good numbers. And yes, you can actually look at it from that perspective, because all the numbers that we have seen, hard numbers on the non-farm payroll or any other retail sales, or we have seen some moderation, but we have not seen any big slump in the numbers so far. So that means the economy is not really gone through a very soft slump, and therefore we should be looking out for more data to see whether the policies of the new Trump administration as well as the expected tariffs has got any impact on the economy so far, so which can lead to some monetary policy changes also. But so far, Fed has been maintaining a stance of wait and watch. Speaking of Fed, we had one more instance of Trump trying to convince the Fed to cut rates, and this time it was slightly different in the sense that he even mentioned they should go for a full-blown 1% rate cut. So this is the first time he's mentioned the quantum that he is expecting Fed to act. Of course, I doubt whether Fed will even react to these things, and they are going as per their own words, very objectively on the basis of the data that is available. On the trade front, as you said, yes, China and the US are on an ongoing negotiation. There is a planned meeting between US and Chinese officials in London coming up this week to further take forward the trade negotiations. Interestingly, a statement from German Chancellor Merz is also seen, where he says US cars would be imported into Europe duty-free in exchange for tariff waivers by the US. So I think US, while there's a lot of focus on US-China trade talks, I think US Europe trade talks is also very important, because Europe is one of the largest exporters, net exporters to the US, almost $250 billion. So how the talks concluding this is also very important for the market. As far as the India markets are concerned, on Friday, we did have a slight strength in the rupee, but still holding broadly around 85-70 levels even after the policy. As I said, the policy is not very supportive of rupee strength unless we see big inflows. But we have already seen the yields fall over the last several weeks, and that means in the 0.5% impact is also not much there on the yields falling. If the yields keep a rebound and also in line with the global bond market trends, investors will be, particularly the foreign investors, will be tempted to take profit from their bond portfolio, can result in some repatriation on the rupee. I have to repeat this, that the yield difference between India and US is now almost at the lowest level seen for several years. So that's something that we have to observe as far as the rupee performance is concerned. Otherwise, stock market took it quite positively as far as Indian RBI's moves are concerned. Overall, dollar, we only saw mild strength after the non-farm payroll data. Japanese yen was the weakest, of course. It weakened to near 145 levels as the US yields jumped, and in euro was well within the range. But a sense of one more bout of correction in the dollar is emerging. Technicals are showing somewhat neutral, while the market is actually positioned quite short in the dollar. That can actually weigh on any fresh dollar short positions to rebound, to see a minor rebound once again. But if you look at gold prices also, it is indicating that at higher levels there are sellers and buyers of sellers of gold to get back back into dollars as well. So it's something that we need to wait and see. Overall, this week also promises to be a very busy week as far as the data is concerned, and interesting to see how the rupee behaves in the face of various decisions that RBI has taken. Thank you.
Thank you, JK. And just quickly summarizing, this week we'll have the inflation prints from various regions, US CPI, Europe, India, and when it comes to the US, whether there has been a pass-through in prices because of the tariffs will be closely watched. On Friday, we of course had the jumbo rate cut by the RBI 50 basis points, as well as a large CRR cut, releasing 2.5 lakh crore of additional liquidity. Remember, since January, RBI has already injected rupees 9.5 lakh crore of durable liquidity. This has been front loading to support growth. US NFP was slightly higher than expected, and unemployment rate was stagnant at 4.2%. But past 2 months' data of the NFP was revised downward as of now. Data coming out of the US has not shown any sort of slump. When it comes to another event to look forward to would be the US-China trade negotiations, which are ongoing, and another planned meeting is supposed to be held this week in London. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.